Welcome to Looking at the Markets with me, David Moadel. I'm going to answer a question that I've heard sometimes, especially when there's a hot new company that everybody's talking about. Should I buy an IPO? Meaning, should I buy stock or options right when those shares are offered on the free market for an IPO? Well, let's talk about that. IPOs, the fantasy and the reality. If you wish you had bought up shares of Apple, Facebook, or Microsoft right after its IPO or initial public offering, you're not alone. Perhaps you're looking to the next hot IPO as your ticket to wealth. Yet, are the odds in your favor? Do most IPOs end up like Apple or Microsoft? Let's find out. Well, the fact is, upon the announcement of a highly anticipated IPO, large institutional investors get first dibs on stock shares before any shares are released to retail traders. By the time retail traders can buy shares, the price has already increased considerably. As usual, retail traders end up holding the bag. Besides, for every hot IPO that ends up like Apple, there are quite a few that end up in disappointment. Here are a few examples. The first one is Zynga. Remember when that came out? Yeah, a few years ago. And had a little pop in the beginning, nice. And then the drop. And it never really recovered from that drop, at least not so far. And from the beginning, if you had held on to it from the beginning, you would have lost about 70, maybe 71% of your investment. This next one is Groupon. And you really didn't get that initial pop there, did you? Just kind of wobbled and then down. And now it's way down. So the trajectory is clearly to the downside. And if you had held on from the beginning, you'd be down about 86 or 87%. Not too good. And this one is Shake Shack, one of the more recent ones. Yeah, it was just in 2015 that this one came out. And there's Shake Shack, up and down. And it, again, never really recovered from that, at least so far. And it's down, not as dramatically as the other two examples, but you'd be down about 15% if you held from the beginning. Now, while not all IPOs don't look like this, but we can detect a pattern in these few examples. Plenty of hype, there it is, followed by a large dose of reality. Personally, I prefer to invest in companies with staying power, solid earnings over a period of decades, and plenty of capital. Chasing price action in hot IPOs simply doesn't fit into my overall financial plan. I think it's best to avoid what's hot in favor of solid financial management with an eye toward steady income. Be wary of IPO hype and look to reliable companies as your go-to investments. So if you'd like some help or advisement on finance, stocks, options, investing, or anything of that nature, please feel free to contact me anytime. My email address is davidmoadel@gmail.com. I'll be glad to hear from you. Thanks a lot.